Hello and welcome. You're watching Closing Trades here on ET. Now we are holding on to 26k by the skin of our teeth. At least a third of a percent higher on the Nifty, and from the day's low, we're doing fairly well for ourselves. We're up 125 points from the day's lows, so a decent kind of move, and we're off around 40 points from the day's high. Again, a decently tight band in which we've operated. We've been in the green more than we've been in the red, which is the other key positive. In terms of names which are carrying the index higher, Max Health is one, 4.3 odd percent higher. HCL Tech is 4% higher, impressive move. Infi is up nearly 3.5%. Wipro, TCS, basically it's the 5 IT players which are carrying the index higher for sure. But outside of that, HUL is doing very well for itself. So is Sun Pharma, also chipping in and contributing to the gains, along with the one which I mentioned, which was Max Health, which is doing fairly well for itself. When I'm combining the points contributions by some of the IT players, at least the top three, Infi, HCL Tech and TCS, they're contributing roughly 60 to 70 points on the index, and that is causing that meaningful jump that we're seeing on the index today. So clearly it's the IT stocks which are carrying the index higher. Let's look at banks. 50% higher on the banking index. FMCG, despite the move by HUL, is absolutely flat. In fact, just a slight tinge of green on the FMCG index. So is the metal index, very, very similar, and the pharma index. Realty continues to be under some bit of pressure, with broader markets also under some bit of pressure, especially the small cap index, down a third of a percent thereabouts. The Nifty mid cap index is around a quarter of a percent or so. Kunal, this move, firstly, good afternoon. This move to 26k this time around, is the story going to be different?
That's the hope which we have every time. Fifth time this is
Yes.
for the index to retest the 26,000 mark. Yeah, the belief is that this time around, many of the other moving parts for the markets indicate that the weaker sectors are making a comeback. Your opening line of the Nifty IT index being one of the key prominent indices, and many stocks within the IT pack led by Infosys, TCS, HCL Tech, etc., large cap names, I think are helping the benchmark indices sustain this kind of a gain. So that I believe could be a positive sign which you're looking out for. And add to the fact the PSU banking names led by the likes of SBI, short covering or recovery across the likes of Bank of Baroda, PNB, CanBank, etc., I think is the other one which is fueling the market. So that I believe is a very important ingredient. We were discussing about the PSU banking stocks over the last few weeks and how the sector has been quite strong. But then with every attempt towards 26,000 mark, you have new addition in sectors which are participating. That is an improving sign of the market breadth. Maybe I think we can hope that this time around we'll finally break past about this 26k hurdle for the fifth time in terms of the retest, and hopefully get past about the life highs pretty soon for the indices.
And Kunal, what gives you that possible confidence, if I can call it that we will not slip? Because you've got banks and IT, so banks are at all-time highs in terms of the Nifty banking index. IT has made a phenomenal move today. Can those kind of moves continue? Because only then will we continue to build on the gains that we've seen today.
See, the beauty about markets, Harsh, is that it's a balance between what's happened internally and externally. Internally, we are solid. I mean, in terms of the market breadth, in terms of the structure of the markets, the construct, no complaints as such, because you can't pinpoint, any sector which is extremely weak, except for IT stocks or FMCG, which largely have been more sideways to say the least in the last many weeks. You can't pinpoint a sector which is very, very weak or with something which is dragging the indices. You look at large cap names, contributors, even with the heavyweights like L&T, Reliance, etc. These stocks have done fairly well for themselves. So no complaints in terms of the market internals. It was just that over the last couple of days and for the last 1 week, the selling across the global markets were putting a bit of a lid or a cap for the indices on the upside. But when the market breadth keeps on improving by every passing day, sector data points keeps on improving, then you eventually come to a point where the markets are gearing up for a breakout on the upside. We are at that kind of a cusp in terms of a breakout, if you ask me. Now, whether the global markets will oblige, if that happens, then you might probably expect the breakout of the life highs in the next couple of days itself.
Kunal, do you think that IT is leading this breakout for the Nifty here? Because 75 points up, the entire IT pack, and The Nifty is of 110 points. So it's entirely IT led actually today.
Yeah, in fact, the last time we were at 26,000 mark on a sector performance basis, Nifty IT index, PSU banks, and to a certain extent mid-cap index. These are the three top performing indices which are done reasonably well. Nifty IT index in the last 2-3 days has gone through a 400, a rather 700 point correction, but then it's managed to recuperate the entire loss of the 700, 800 points in a matter of single day and crossed back above those previous highs. So yes, in this leg, the Nifty IT index seems to be one of the stronger sectors, and along with that, the PSU banking and the mid-cap 50 index.
No.
75 points, Sajid, is what IT is contributing. You were just highlighting that to me. 75 points is what IT is contributing to the Nifty 50 combined. This is all IT entities. The top three contributing roughly 65 points to the Nifty. I mentioned that. The others, really no big movers there except healthcare, and that I believe is largely Max Health, which is driving the kind of gains within that sector.
And that's on the back of the earnings that came in, which were very good earnings for Max actually.
Correct, and that was over the weekend, of course. But the stock seeing a move today. Kunal, within IT, what are your top picks?
Yeah, I think after today's move and of course in cumulation with the previous legs, HCL Tech stands out to be one of the stronger name on the relatively the RS charts, relative strength charts. Then I think there's a very strong breakout which is likely for Infosys. The stock is gearing towards more like a 3-month or a 4-month consolidation breakout, and it's almost like I think 112 to 120 point range for Infosys from 1430, 40 thereabouts towards 1540 odd mark where the range is for Infi. So I think in that sense we could be looking at a substantial upside for many of these large cap IT names. And from the mid cap end, we've been bullish on Persistent for quite some time. The stock has been maintaining its uptrend quite fantastically. Even today the stock has broken past about the key psychological mark of 6,000 and was one of the few large cap mid cap IT names which started to show signs of strength from the first 15 minutes itself. So that was one of the other stock which I would be bullish on.
Okay, now with regard to IT, it's the big mover of the day. So we'll focus in on IT. Does anything change structurally post the earnings, at least in terms of whatever commentary has come through across the board with regard to IT, and how do valuations stack up? Now, Indian IT has made a roaring comeback, frankly. Post the 1st of October, the index is up 8%, 6 to 8% odd. And this optimism around progress in the with regard to the US trade deal is only adding to that. Midcaps leading the surge. Persistent, Coforge, LTI, Mindtree are among the biggest movers. In fact, Ashesha is here to unpack all of this. Ashesha, how have earnings been? And how has IT really performed over the last month and a half? Because the move today is just so strong.
Well, yes, as you rightly mentioned, Nifty IT index is up 6% from the start of October. And let's also talk about individual stocks then. Persistent System is up 27% over the corresponding period, followed by Coforge, HCL Tech, LTI, Mindtree reporting double-digit gains over the period October 1 to date. And we also have some other stocks. Oracle Financial is the only one in the red, down 5%. But Infosys, Emphasis and Wipro have also registered marginal gains over the corresponding period. But Nifty IT index as a whole, as you mentioned, has risen nearly 6% from October 1 to date. Let's also talk about the second quarter earnings that were reported in the intervening period. TCS reported 0.6% revenue growth, although PAT declined by about 5% on a sequential basis. Now, as far as Infosys is concerned, HCL Tech, both of them reported revenue growth in excess of 2.5% sequentially. Wipro, meanwhile, reported 0.7% revenue growth. EBIT margins, meanwhile, were also steady. We didn't see any major negatives or positives as such, but profit after tax, even on an aggregate basis, had declined on a sequential and on a year-on-year basis for the IT sector. Let's also talk about several factors which continue to be a big trigger for the IT index. One is AI. Now, remember, management's indicated that nearly 30 to 80% of the new deal wins that they are signing have AI-led projects. So this is one big trigger which continues to be a tailwind for the IT sector. Deal wins are strong. Management say that conversions continue to remain slow, but despite that, deal wins have started picking up gradually. Mid caps, however, have been more upbeat as compared to large caps. As far as the segment-wise performance is concerned, remember BFSI segment performance was upbeat, but retail and telecom arms reported weak set of numbers. Hiring, meanwhile, continues to remain muted, but utilization is at multi-quarter high. So these are the key factors that transpired IT sector earnings in the second quarter. But let's also talk about some important commentary that has come in from managements. TCS, they say deal wins have been strong. Big AI-led data center investment will continue to drive earnings growth for the company going forward. Infosys reported solid margins. They also commented on AI. Coforge and Persistent Systems outlook continues to remain very positive. Persistent, in fact, has said that robust double-digit growth is the guidance that they're giving for the next half of the year. Meanwhile, Tech Mahindra, they are saying early signs of stabilization with improving margins. So across the board, the consensus view from the management commentary is that the second half of the year is likely to be very positive, and the outlook with respect to deal wins is also very strong. Now let's also talk about valuations then. As compared to 5-year average, we have Coforge, which trades at about 36 times versus 33 times its 5-year average. So slightly higher than the long-term average. Infosys is cheaper as compared to its 25 times average. Wipro, HCL Tech and LTI Mindtree price to earnings multiple also for you on your screen. So clearly, IT sector is buzzing in trade, up 3% today, and as you mentioned, up 6% since the start of October.
Thanks, Shesha. We have now joining us Sandeep Agarwal, Fund Manager at Sovilo Investment Managers. Sandeep, thank you very much for joining us. How do you look at the entire IT pack, given the fact that nearly 9.5% run up since 1st of October for the entire index?
Yeah, hi, good afternoon, and thanks for having me on the show. So, I believe that, the reason for why the index has gone up is very tough to call out because there could be multiple things leading to that. There could be, short covering or massive underweight, which people want to uh, increase some weight. All those things could be the cause. But fundamentally, how we see is that, the efforts are going down by 30% in IT software services, and you can't compensate that so quickly. So revenue growth, I think, for at least this year and next year will be substantially lower, and for the whole sector. And if growth is low and there is no possibility of any delta on margins, in fact, even rupee depreciation is seen in a wrong way because it does help EBITDA margin optically, but at the other income level, it hurts, and the PAT level are basically similar. So I think very tough to call out why the index has done well, but we believe that you cannot justify the current multiples and the PEG ratios at which the sector is trading. And honestly, I don't see any trigger for growth in the sector for next few quarters from now. Obviously, large cap growing at 4-5% and mid cap growing at 10-12% is possible, but at those growth rate, the PEG ratios are between 3 to 5 times, which is very, very expensive for this sector.
Sandeep, how do you look at the quarter two numbers? Because we entered quarter two with a very cautious outlook for IT, but many of the large caps did fairly well. I won't say that they were outperformers, but the mid cap companies like the Persistence and the Coforge also did well there. So the IT as a whole, the entire pack wasn't so bad with respect to earnings in second quarter.
No, absolutely. So, the expectations were very, very low. And because expectations were low, the numbers were looking in line or decent. So, you did not see an accident or any big negative surprise from any of the companies. But we also remember that expectations are what? For the large caps, the growth rate expectations are 0 to 2%, 3% year over year, we are talking. And for mid caps, it was between, 10% to 18-20%. Now the large caps are trading at 20-25 times and the mid caps are trading at 30-35 times. So I think, offering 4-5 times PEG ratio to large caps and 3 times to 5 times for the mid caps in all companies is little too much, because remember, right now the fall in efforts is not showing up in numbers. It generally takes time. As the new deals keeps coming in and the renewals happen, the efforts will continue to fall. And even if you are able to increase a little bit of pricing, I think it will be tough to report a very substantial revenue growth. So I don't see the industry to grow at more than 6-7%. And within that, the large cap, I think 5-6% growth, and the mid cap maybe 10-15%, somewhere between that. And if you keep both of that number in mind, I think it's very tough to make an investment case in any of the categories.
Sandeep, I want to play devil's advocate very desperately, but what I have to do is I have to slip into a very short break. So I'm going to do that. But before we do, viewers, listen to what Sumit Jain, who's the senior research analyst at CLSA, says about growth levers for the IT sector forward amid today's shifting geopolitical landscape. He also talks about the impact of AI. Listening to an excerpt of that conversation, we'll slip into break, come back, revisit that conversation, or rather continue that conversation with Sandeep.
If you are using more of AI agents in your delivery solutions along with human oversight, which is extremely important, by the way, and that's where we are positive on IT services, because you still need a lot of plumbers to stitch the complex technology stack, because AI inherently is probabilistic in nature. It is not deterministic. And in the enterprise outcomes, you need to have a defined outcome every single time. And that is why, this revenue per employee metric is extremely important. So, and I think a lot of companies have talked about on that front. The other thing is more shift from time and material to fixed price, outcome-based projects, where the onus of the success of the project is on the SI. And depending upon the success, they get the proportionate risk and reward. So it's more like a consulting-led kind of engagement, which is what Coforge has done phenomenally well under Sudhir Singh in the last 7-8 years. And obviously it is reflected in the shareholder value creation in that stock.
Another stock which has been good is Persistent in the way they have been able to scale up the product delivery as well.
Yeah, so I think Persistent has a very unique positioning where I would say the roots of the company were like they always wanted to go into the high-end coding work around product platform engineering. So the data platforms or the cloud or hyperscaler software platforms we are seeing, they have been actively involved in building those platforms.
How do you look at some of the other aspects of the company? You have a Cognizant which is started being very aggressive in this market, not just in the way it's portraying, but also in numbers which is there. Do you think that IT companies are lacking that aggression?
Yeah, I guess the CEOs who are pretty vocal out there around their initiatives on AI and trying to pull out or push more client stories, what they are doing to help out their clients to adopt Gen AI, and then reflecting that in their partnership with the ecosystem providers and then showing it in the order book. And because order book is what translate to revenues and then profits. So this, I think, is the whole chain that we need to look at carefully, where I would say the company management aggression and strategy are the starting point. And that's where we could see that under Ravi, Cognizant has done phenomenally well in the last 2-3 years. And wherever you see a similar aggression in the management and this whole cycle, those companies are doing really well.
Welcome back, and we're talking IT today, and that's largely because of the move that we've seen on IT stocks today, but also it's because of since the 1st of October, IT has really outperformed. 9% is the gain that we're sitting on the Nifty IT index from 1st of October till date, and therefore need to contextualize this. But we can't contextualize it without looking at what's happening across the world. AI, are valuations finally hitting a ceiling? The debate takes center stage as Alphabet CEO Sundar Pichai becomes the latest voice warning against irrational exuberance in AI investments. This as the street keenly awaits Nvidia's earnings. And while the numbers are expected to be robust, valuation concerns of course remain. But how will this trickle down to global markets? Snehi is here to tell us exactly what to expect from Nvidia's numbers.
Well, yes. So later today, all eyes are going to be on global semiconductor chip maker Nvidia. A strong set of numbers are expected for their Q3 calendar year 26. Let's understand what the street estimates are. $55,189 million is where the revenue estimate is, which is up 18% on a sequential basis. EBIT too, healthy growth is expected over here at above 21% on a sequential basis at $36,456 million. For net profit, the number is pegged around $30,880 million, which is an uptick of about 20% on a sequential basis, and EBIT margins too are expected to expand to 66% compared to 64.5% sequentially. Now, while this is the street estimate from Nvidia, all eyes are going to be on Nvidia's order book commentary, the commentary on chip manufacturing. Remember, lately Nvidia was in the news because its CEO Jensen Huang said that they're hoping to make a breakthrough in China in terms of exports too. So all of these comments are going to be important to watch out for. And also, a few days ago, Jensen Huang has also said that Nvidia's order book for FY25 and FY26 combined stands at $500 billion. So this is also going to be important to get clarity on. Other than that, let's rewind a little and understand why Nvidia's earnings are going to be important for Nifty companies back home in India. Now, Nvidia's results has set the tone for Nifty IT. A strong print could boost the sector sentiment in India as well. AI demand commentary is key for Indian IT deal pipeline. Strong Nvidia numbers, they signal good global spending in IT, so this is going to be positive for companies like TCS, Infosys and HCL Tech. Weak guidance could delay AI-led projects for Indian firms. Now, shifting focus to data center, the data center build out in India hinges on the graphics processing unit supply. And if this demand is strong, it means the GPU availability is going to become costly and it's going to become tighter for Indian data center firms. India semiconductor ambitions benefit if Nvidia hints at a supply diversification. So this is also positive. Nvidia commentary will shape global tech flows and impact FII sentiment towards Indian IT companies, and an upbeat Nvidia outlook supports AI hiring and talent demand in India. On the flip side, soft result may trigger risk-off mood weighing on Indian markets. So if you take a look at all of these factors, this is how Nvidia's numbers will play out on Indian IT sectors back home. Just taking a look at some of the top US tech stocks and how they've fallen off their recent highs, and the biggest one here is Adobe, a 42% cut from its all-time high. You have Meta, that's lower by 25%. So all of these stocks could also see a little bit of an up move if Nvidia, the sector leader, comes out with positive numbers. So ahead of its earnings, Nvidia was lower by more than 2.5 to 3%. Let's see what happens in the US market today and Nasdaq particularly based on how Nvidia comes out with its numbers.
We will look out for those numbers. Thank you so much, Sneha, for putting that together. Sandeep, coming back to you, top line growth may not be something that the IT companies may provide, but what they might provide is margin expansion, which could provide EPS lift. And therefore that growth may just be strong, and PE ratios compared to 5-year averages have compressed significantly. They are trading 20 to 30% lower than the 5-year averages. Doesn't that make a case for buying IT at this point?
So, while you are seeing the 5-year PE ratios, but the point is that the average growth has also come off quite sharply, right? So post-COVID, you saw a year when even TCS has reported 29-25% kind of growth. So if you and if you take an average of that, today we are at much lower growth rate. So only seeing PE ratio will not help. I think the growth also should be put in perspective. And while I agree to your view that, in this industry now margins are not a big challenge, but growth is. But remember, margins cannot improve because there is every year you have to give wage hike, and there is a nominal inflation on the lease rentals and other costs, airline cost, hotel cost, training cost, and all. So you can't make a case for a higher earnings growth than revenue growth. It's very tough. Even if you are able to post similar revenue and profit growth, I think it is a great achievement. And from that perspective, as I believe and hold on to my view, it's very tough to make money in this sector. Maybe, there will be this kind of situation where this sector will go up. And we have seen that happening many times in last few months. And then again, giving away all the gains when actual number comes. And also remember that the quarter we are in, December, by default is a quarter where, there are holidays and manufacturing gets hit hard. and then next quarter you have February where there are less number of days. So there is no way you will get any big positive surprise this or next quarter. As far as the anti-AI trade which people are saying, I think it is not correct to see everything with the same lens. In my view, some of the stocks where the risk of price disruption is very high, like Nvidia, and on which I have already given my view earlier also, that it is insanely valued right now. The P ratio may not be right, because at the 92% market share and peak of profit, you cannot apply P ratios. So I think when it comes down, the whole ecosystem surrounding it will come down. Although that doesn't mean that the top 5-7 stocks in US will also come down in the same way. But yes, there will be some correction there, and when that happens, then you will start listening to some other story where it will be said that Indian IT companies are dependent on those technology companies, and if those stocks have come down, we will also come down. So I don't see that there is this structural positive. We are fundamental people, and fundamentally I will only be positive there is growth revival or something, which I don't see happening. There is no reason to believe there will be a sharp growth revival or even earnings revival.
Sandeep, if you look at the performance, the order booking for many of the IT companies has been very encouraging. None of this slowdown is reflecting in the kind of order booking that we have seen. In fact, many of the mid and tier companies have seen a better order booking in this quarter. If you're penciling in a slowdown there, we haven't seen that coming in through an order booking here.
So the right way to look at that is the book to bill ratio, because the problem is that only absolute book will not help, absolute order book will not help. And secondly, remember that in IT it is very tough to make any conclusive decision based on order book alone, because the order book is a mix of different kind of deals which could vary in different time horizon, and because of that you will never know how much will be booked in which year. So I think the right way to look at it is what is the volume growth, and we are not seeing volume growth coming in any of the companies. There is growth in ER&D companies, some of the ER&D companies, but that growth is also limited to, let's say, mid-teen to high-teen. And for that, if you are going to give 35-40 multiple, it is definitely a risk which we carry. Because remember, there the operating leverage to improve margin is also limited, because the staff costs are very high for the quality of work which is required. And secondly, also there is a normal inflation which is happening, and also wage hike which you have to give. So I don't see strong case where this sector will look attractive right now. Yes, some kind of disruption which increases the effort, and in last 30 years first time I have become negative on the sector, because I believe that this is the first time when efforts are going down in the sector. Before that, no disruption has caused efforts to go down. Always efforts have gone up. This is the first disruption where efforts have gone down. And our leverage from India, software factory of the world, is efforts. And if efforts are going, the time and material thing itself is going off, then how will you make money? That is a question. It means if they make money and really they see big growth, I will be positively surprised.
Sandeep, last question. How much of IT, of Indian IT, gets impacted as a result of, say, the Nasdaq moving, say, US markets moving, say, US policy? And talk to us in earnings terms, because that essentially is the knock which IT will take if at all there are no rate cuts which come through, or if the funding within the AI universe reduces. I wouldn't say dry up. It's unlikely to dry up, but even if there's a pullback with regard to that funding.
So the right way to build a proxy is high tech vertical and the some extent product engineering services. So if you see, give or take, in India, the exposure of these two sectors is between 17-18% total. And if you assume that 70% of that comes from US, so we are talking about 18% into 7%, which is like 12% impact. And I don't see that that number will be like down 50% or 25%. So while I am negative on the growth and margins, but at the same time I don't see Nasdaq coming off or the constituents of Nasdaq coming on actually changing the fundamentals also negatively. So the impact is very limited. The point I'm trying to make is that we cannot see good growth, but at the same time, whatever we have, will be able to easily defend it. So I don't see even downside risk on whatever we are doing. But for that, why should I pay so much high PEG ratios?
Okay. All right. Sandeep, thanks so much for joining us, giving us that perspective. And we'll let you go on that note.
Thank you.
Okay. According to, again, and we'll stick with IT, according to a Gartner report, India's IT spending is projected to reach around $176 billion in 2026, marking a 10.6% YOY increase. To get a sense of what will drive this growth and what are the key trends emerging in the Indian IT sector, earlier today, we spoke to D.D. Mishra, who's the VP analyst at Gartner. Listen in to excerpts of that conversation.
Uncertainty pause that started in first half of H25 is easing, paving the way for renewed confidence and fresh investment in 2026. So that is number one. The other demand drivers are like, the Indian enterprises are expecting to ramp up IT budgets next year. And this growth is fueled by expanding adoption of cloud platforms and digital technologies. So that is also contributing to it. We have seen that significant increase in the data center investments in the past as well as in the current year as well. Positioning India for AI readiness and serving as a major catalyst for IT market growth. So that also is fueling that sort of a kind of a projection which you have seen. Now, CIOs are also prioritizing the cybersecurity, AI, ML, and data analytics, and that is also contributing factor in this particular growth. Evolving requirements for data privacy and sovereign cloud solutions will drive further investment, and that is what we are expecting. And we have seen that DPDP Act has been implemented, is getting implemented, and there are AI governance framework which is coming up, which is going to contribute significantly to this kind of a growth as well.
You're watching Closing Trades right here on ET now. We're holding out quite okay. We're back at the 26,000 mark, at least for the Nifty futures. 131 points higher. Max Healthcare, HCL Technologies, Infosys, Wipro, TCS, it's IT all the way. That's the one which is taking the markets higher. Some of the new age names as well are looking quite okay. So they are also making their due contribution. Other than that, there's the Sun Pharma, Unilever, select buying in a select few stocks. And of course, SBI, which is holding up a good 1% as we speak right now. But it's good to see that global market weakness, we've managed to evade it so far at least. But let's chat a little bit more about markets and what one should be doing. Sunil Subramaniam joins in on the show right now. Sunil, hi, afternoon. A little bit of a shakedown when it comes to the US tech stocks. So far, we've managed to escape the weakness. But do you think the US tech weakness is going to persist? And then will it rub off on us?
But interesting that you're asking the question when US tech is weakening and Indian tech is strengthening, because when US tech was strengthening and Indian tech was weakening, nobody asked. Right? So as you know, our tech has been the worst performer over the last 1 year. So I think basically this is about the fact that our IT services are in the real actual domain, and AI is a part of the new industrial revolution. So it is going to be of a promise and then a catch up to the promise. There will always be disappointments. There will always be over anticipation about the future in AI. And so I think that the US tech is prepared for a volatile ride, right? The future is bright for AI, and that's why the tech was running up. But as you know, the markets sometimes overreach themselves. I think that's what's happened over the last few months. And this is a bit of healthy correction. But over a medium term, I still see that AI is a good, solid foundation. And surprise, surprise, Indian tech companies, I expect them to adapt to the new AI journey and hence come out as winners over the medium term.
Okay, great. So that's the take with regard to IT. We've done quite a bit with regard to IT, but talk to us about the financials, Sunil. Not seeing them perform materially, especially the private sector banks. They've lagged. What next for that story?
Well, the reason for that is that a lot of it is in the price. If you know that it's the banking sector which DIIs have been supporting all the period when FIIs have been selling. And what's happened is that FIIs, when they sell, and especially a passive fund sells, 30-35% of that is the banking space, right? Now, DIIs, when they buy, they've had a choice between a much more value public sector bank versus a private sector bank, which is probably priced to perfection. So when I say price to perfection, which means there's no margin of safety there. So a little bit of bad news, little bit that the growth is slipping, it means that they are always in a 10 side. Whereas in the public sector bank, on a price to book, they are still much, much cheaper. And the future looks good for them for 2-3 reasons. One, government is solidly backing reforms in the public sector. And because of which you're going to see the capital limit go up to 49%. You're going to see good, solid mergers of good quality banks in the PSU come back and come up in the global rankings. You're going to see them access international capital more because of that. And when the private capex journey, which already the green shoots are visible, when that picks up momentum, you will see that it's the SME, MSME which has to execute that expansion order. And it's the PSU banks which are ideally positioned to lend to that segment. The private sector's experience at lending to MSME has not been great. So we are seeing that there is a little bit of NPA pressure there, especially in the NBFCs who have ventured there. But public sector banks know that space well and know how to ride that space. So I think that the attention is on the public sector banks, and that's why private sector banks are suffering in relation, I would say. Otherwise, in the immediate future, I expect the lending growth, the numbers that I saw are picking up. There's double-digit credit growth happening, and their numbers should be decent. But just like I said, they are price perfection, hence the margin for error is very less.
The day's highs for Nifty, and I guess propelled by the Nifty Bank, because that's also scaled a fresh high. SBI, of course, is one such case in point, which is contributing quite heavily. ICICI Bank also holding out about 0.5%. And Kunal, it almost seems like it's a thing of forgotten past, what was happening in the, in the US equity markets, and that fear of a rub-off on us.
Yeah, I think today's move is very solid, and it's probably an indication that our markets are looking far beyond the global cues, what's been handed over to us over the last few days specifically. So I think, that's a very positive sign. We were discussing this earlier also, that, our market internals have been very strong. With every passing towards 26,000 mark, there are new sector additions which have happened. PSU banking stocks have been one of the strongest one, but today you have the IT stocks which have managed to make a comeback. So and the number of weaker sectors over here, or the impact of the weaker sectors is not getting felt from the market perspective, and that's why even after mild retracements from those 26,000 mark, we time and again you come to a retest. Now with this data where we are seeing put writing emerging at 26,000 mark, 25,900 levels, I think the traders are going with a bullish stance for the next couple of days into the Nifty on the monthly ECD's expiry, and that could probably be an indication that we may cross over to that 26,200 levels pretty quickly.
Well, another couple of stocks which are languishing. In fact, one is a Samman Capital. There's a Supreme Court order pushing the CBI to file an FIR against the company. The stock is taking a 7% knock today in trade. We've seen that after that order came out. Also, KEC International clarifying that the embargo on new orders coming in from Power Grid is unlikely to be material for them. But despite that, that stock down 10%. We'll speak about both of those. In fact, let's go across. We have Kanishka with us to talk to us about exactly what's played out with regard to a KEC International. Kanishka.
Well, yes, KEC International is in focus today, and it's under heavy selling pressure given that Power Grid has barred the company from participating in ND tenders for the next 9 months from here on. Now, this Power Grid action comes as from an alleged breach of contractual terms, which is a matter that KEC had already disclosed to the exchanges on March 24th, 2025, that is earlier this year. Now, remember, this restriction does not impact the ongoing project. That's the word coming in. So let me tell you what triggered this. Now, the ban linked to an alleged 2.5 lakh bribe paid for favors in bill processing on Power Grid contracts. On March 24th, the exchange sought clarification from KEC after reports claimed that a Power Grid GM and KEC executives were involved in this bid. Now, the CBI's FIR in this case has also named KEC and its senior executives. Now, KEC says that it is exploring all legal options and is engaging with Power Grid for a review in this matter, that is a ban of 9 months that has been imposed as far as the new tenders are concerned. It is also maintained that it does not expect any material financial impact on the company thanks to its strong order book, while reiterating its commitment to governance and compliance. It says that it is fully cooperating with officials. Just for context on how much this could actually impact KEC International's T&D segment is the highest one, that is the largest one. It has a 65% share in the company's order book, and year to date, that is in this particular year, 17,000 crore worth of orders have been recorded within this year, which includes a 1,700 crore rupees order from Power Grid, which means it is actually about 10% of the total order intake that the company has seen. So yes, it could be an impactful situation, and that's also showing on the stock, which is under heavy selling pressure today.
Yeah, KC, Samman Capital, Biocon, Hudco seeing some profit taking after a big move in the stock the last 2 trading sessions. But you know what? We'll slip into a very quick break. When we come back, we'll discuss some of these buzzing names.
Welcome back. You're watching Closing Trade here on ET Now. Let's go across. Let's talk about a few stocks which are doing very well in trade. One is an Avanti Feeds, which is perked up 11% in trade. You have a Linde India. You have a Latent View. There's an Intellect Design, Endurance Tech. It's dominated by IT, but then you have some bit of flavor with regard to the India-US trade deal likely coming through, also playing out like an Avanti Feed. I want to talk about maybe some of those stocks. Kunal, a Gokaldas Exports, a PDS Limited, and Avanti Feeds. How do these look on charts, and what could a good opportunity within this pack be if at all a trade deal were to materialize?
Yeah, I think out of this, we are seeing very good recovery. So, you look at this in the context of the April-May period where these stocks were, and after the 25% correction broadly for Avanti Feeds, for example, the stock was at 900, went down to as much as 640, 650 levels. And now the stock has come back to 850 mark. So, which means it's managed to recuperate the entire or most of the losses which it had faced after the news flow. Same is the case with Gokaldas Export, the stock now comfortably at 900 plus levels, inching towards a breakout on the swing indicators which you look out for. So I think on the short to medium term charts, we are seeing evidences where many of these stocks have recovered more than, say, broadly 50% of their correction. And some of them are coming closer to a breakout of the previous highs. That as an overall sign is a very, very encouraging signal that we are looking at the markets trying to buy the negative news flow into these stocks and expecting that once the turnaround happens, you would probably expect that these stocks would come back to their previous swing highs and more.
In fact, since we're on the subject, let's take it across to my colleague Samir Dikshit as well. He's picking up some chatter in New Delhi about a PLI for the textile space, and the government has approved 17 new applicants under the PLI scheme. It has also withdrawn quality control order on viscose staple fiber to aid the textile industry. Over to Samir for more details.
In a move to provide much needed relief to the textile industry, to support the industry, the government or the textile ministry has removed the quality control order QCO on viscose staple fiber. Now, this viscose staple fiber, VSC, is a very important raw material for the textile industry, and the industry has been constantly demanding that the QCO has actually further stringent the norms, and this has led to the decline in the import, and also the cost has gone up significantly, which is making sort of a challenge for the textile industry, especially in terms of the apparel. The finished product that they are looking at, it is getting more costlier, and in a very competitive environment, especially when the Indian textile industry is not just competing with the neighboring country, but also to sustain the export momentum as well. So seeking that sort of challenge, now the textile ministry has removed the QCO as of now, the quality control order on VSC, and government or the ministry understand that this will help to ensure the uninterrupted supply of the raw material. The cost stability will also be there. In addition to this, the textile ministry has an ambitious target, and they have set up Vision 2030 for itself. And this Vision 2030 is that basically they are going to achieve $100 billion of exports by year 2030. And not just export, but also when it comes to the apparel segment, they're also they are looking to have a target of $350 billion. So that's quite an ambitious target, but to achieve it, the textile industry, which is the most important stakeholder, they have to be supported well. And for the same, this policy tweak or the removal of QCO has been done by the government so as to ensure that whatever the support is required or the raw material availability is required for the industry, that remains in place and no interruption is there.
Okay, thank you so much for that, Samir. Now, we spoke with Satyendra Singh, who is the CEO at Sirma SGS. He says that the PLI approval for telecom and IT are in operation. Listening to what else he had to say about the government's recent approval of 17 more projects under the ECMS and how it will benefit Sirma.
Overall, PLI, we have approvals for PLI for telecom. We have approvals for IT. And those are the two PLI which are in operation. And we have been benefiting from that. And in terms of future, I think we have got the approval from PCB as well as on the camera module. So these are the 4 PLIs which are in action. And we are kind of making sure that we are using those benefits coming from the government and working with our customers to ensure that they are working with us and getting the benefit of their supply chain as well.
Well, still in conversation with Sunil Subramaniam, and let's just take stock of what's happening in the market. While IT, of course, is rebounding nicely, banks all the way, which are also giving that due leg up to the indexes. So banks, and of course, other than that, you've got a Max Healthcare, which is holding out well. There's Nestle, there's Titan, ONGC is holding up higher. iSure, M&M, ICICI Bank are where you're seeing some material moves come by. On the weakening side, though, you've got a Tata Motors passenger vehicles, you've got Maruti, Bajaj Finance, and Hindalco, which are the ones which are under pressure. Sunil, what's the call now on the PV segment of the market? While M&M, of course, is dominating, but M&M, of course, has other businesses as well in the listed entity. But pure play passenger vehicles, what's the call?
Well, I think that they've seen a good leg up in the festival season. Now there will be a bit of a lull, but again in Feb, March, the depreciation aspect will lead to a boost in sales. And normally, historically, March and then the first 2 weeks of April, do invoicing for March itself are very strong months for the passenger vehicles. So I think that any temporary lull could be a good time to accumulate because the whole GST rate cut thing will play through the whole of next first half of next year too.
Your biggest beneficiaries of that rate cut, how would you play it?
Well, the best way to play it, I mean, if you look at it, is the mass market, because I think the GST is going to make the biggest difference, because the biggest drop in GST has happened in those vehicles, right? Because the higher vehicles are treated as sin goods and the GST rates remains high. But that doesn't mean that there'll be a fall in those sales, but incrementally, if you see, it's the entry-level cars which have suffered over a period of time because of the K-shaped recovery in the auto segment along with other consumption. So I think the bounce back will be the biggest. I would still bet on the entry-level space of the cars up to, let's say, 7-8 lakh rupees as the biggest driver of growth for the PV segment.
Okay, that's the take coming in on autos right now. Well, of course, tech is the one which is actually holding out. But Kunal, let's revisit your call on Hudco. You were very bullish. Today's weakness, should this be bought into?
Yeah, so I think I would look at this as an opportunity for content traders to look at a buy on Hudco. Maybe not at current levels, but I think closer to 235, another 1.5% from current levels could be a very good zone where the stock may find its near-term bottom. The breakout with the stock had shown a couple of days back was on the back of very high volumes. Today, volumes are a little bit on the lower side, so which means we are looking at this as a more of a mean reversion play for Hudco.
Okay. Let's talk about some insurance names as well. Let's pull out what an LIC is doing, maybe over the last 5 days as well as today. Let's see. Let's zoom into that stock. There you go. Life Insurance Corporation worked up 2% over the last 3 months. Well, nothing much, but today up 1.6%, and that one is showing some amount of zing. Outside of that, let's talk about some lenders. Within that, M&M Finance is doing fairly well for itself, 2% higher. And within the banking pack, some of the smaller names, a South Indian Bank and a Jeevan Small Finance Bank, a PNB on the back of the rating upgrade by Moody's, Bank of Baroda, and even some of the other PSU banks seem to be doing fairly well for themselves. I wonder what a Canara Bank is doing. Well, that's up only about 1%. So that rating upgrade, while doesn't change the cost of funds materially, but you may have some of these names which may do well sentimentally on the back of that. But talking about PSUs, let's listen in to the excerpts of an exclusive conversation which our colleague Anurag Shah had with Ratnakar Patnaik, the managing director at LIC, on their Union Budget 2026 wish list and growth outlook. Listen in.
Want to pass on the entire benefit to the customers. We have done so. Similarly, for the agents, the commission rates were rationalized well before the GST amendments, GST modifications came. So we did not touch the agents' commission as of now, but such a big organization, we can surely do something which can take care of the whatever we are losing, likely to lose in input, in the form of input tax credit.
Okay, so what can be that and what would be the quantum of input tax credit?
It is very difficult to quantify now, but I would like to tell you, thanks to Government of India, after the post-GST, the reforms, now the Q3 has been very good for the corporation. We are growing very fast, and hopefully this will help us to end the year with very good growth rates for the corporation.
Okay, so you mean to say that in a whole year, Q3 is going very good, and we have seen that most of your business in month of February and March, we see a huge surge in LIC's business. So you mean to say that in Q4, there will be a big surge in insurance premium because of the GST reforms, and there is no reduction in agents' commission?
Yeah, I am hopeful, I am optimistic. There will be good performance in the Q3 as well as in the last quarter of the financial year.
And you will be able to meet all your targets?
I am hopeful.
Right, okay, that's the LIC MD speaking exclusively with us on ET Now. But the Union Budget 26-27 is expected to underscore the transition of NHAI towards a self-sustaining financial model, shifting its capital expenditure dependence from government grants to now revenue generated through asset recycling. The upcoming budget, in fact, as we understand, is likely to have a big focus on 4 pillars. That's asset monetization, long-term strategy to reduce budgetary dependence, encouraging more private participation, and investment and adoption of new age technology to scale up quality construction of infrastructure as well. In fact, I'm going to take it across to my colleague Samir Dikshit and find out what he's picking up on this. Samir?
So sources are indicating that when it comes to the budgetary allocation, the quantum may not be very exponentially high. It might be similar to what was allocated last year for the highway sector. But this year, the upcoming union budget will be focusing that the highway sector becomes much more self-sustainable in the sense that the dependency on the budgetary outlay has to be reduced, and for the same, a long-term strategy will be adopted. Secondly, the asset monetization is going to be the key driver for this sector. When it comes to the asset monetization for the existing or the current financial year, if you see, NHAI is anticipating a gain of roughly around 30 to 35,000 crore. But for the next year, NHAI is estimating that they will get an estimate revenue of roughly around 40 to 45,000 crore. But to achieve this, there are basically 2 models which will be adopted aggressively. The first one is the InvIT model, which is infrastructure investment model, and the second one is going to be the TOT model. So when it comes to the InvIT model, we are picking up from our sources that public InvIT model could be launched by the government, where the private investment will be encouraged significantly. In addition to this, the government is also likely to introduce 2 to 3 important large projects under InvIT model. When it comes to large size, it simply means that above than 8 to 9,000 crore project. So based on these sort of pillars, the Highway Ministry is looking to become self-sustainable. We are also getting to know that an aggressive spending will be done to induct the advanced or new age technology, especially driven by the artificial intelligence, the drones adoption. So in this sort of direction, we can say that significant amount allocation could be done, but major focus will be on asset monetization and drawing a long-term strategy to reduce the dependency on the budgetary outlay.
Okay. All right. Thanks so much, Samir, for that. I want to also quickly carve out a couple of more stocks which are in focus today and which are buzzing and doing well for themselves, and probably ask Kunal for a view. Archean Chemicals, Kunal, I'm not sure if you track this one, 5.5% lower in trade. Graphite is the other one, but it's even in general a volatile counter. So that one also down 4.5%. Orient Electric is the other one, down 4%. Any of these on your radar as potential opportunities?
Not really, none of them.
Okay. Biocon, Kunal, 2.7% lower. There's a double downgrade by Citi on Biocon. The technical take here?
It's a very difficult stock to trade, frankly, Harsh, because the stock has this tendency of coming into breakout at the peak of momentum when you feel that the stock is getting ready for a higher dimension breakout. By that I mean from a daily breakout you convert into weekly and monthly breakouts. Biocon has faltered multiple times over the last 2 or 3 years. Even the recent charts, I think yesterday or day before, the stock was almost at 420, 425, and 425 being a swing resistance. The stock, had shown confirmations of intraday signals of a breakout, but then from there the stock has slipped back again and is now back towards 408.9 mark. So this makes the trade a little bit more difficult. In an ideal scenario, I believe that buying this on retracement or key supports is a far better strategy for trading Biocon. The nearest support which you can look out for is closer to 385 to 90 range for the stock. If it happens to come back into this kind of a territory, then it makes a lot of positive risk reward for traders to go for a buy on Biocon.
Okay, that's that on Biocon. Sunil, curious to know where within pharma are you scouting for fresh opportunities, if at all, or where is it that you have your overweights?
So I would say it's a barbell strategy. So one side of the bar is domestic healthcare, hospitals, and diagnostics and the like, where there's a good growth path, good earnings growth, and a stable business model, which is ever rising. Okay. But on the other side, as a contra bet, is the export-oriented pharma, the non-generics. Because the generics are by and large cheap and long, but the CDMO pieces and the product pieces, right? There, because this whole tariff overhang is still there on that export-oriented sector. So it's a risky call, but I think that balancing the, that's why I call it barbell approach, is an allocation, I would say, between 65% into the domestics and 35% into the export-oriented pharma.
And Sunil, within auto, do you have a preference? Four-wheeler, which is passenger vehicle, would you like CV more? Would you tilt towards CV with rural probably coming back? Or would entry-level two-wheeler be the way you'd play this?
So I would play two things here. One is definitely the entry-level two-wheeler because I see the rural demand translating there. But apart from that, my focus will be on CV because I see private capex starting its journey to recovery, and it's a long-term journey. And commercial vehicles are a key part across LCVs, HCVs, MHCVs. All of them are needed for transportation and logistics, which will tailwind ride on the capex recover. So for me, the CV space from a medium-term outlook looks like a very good bet at this time.
All right. One of the star performers, Sunil, has been Shriram Finance. It's done ever so well over the last 3 to 6 months. Is this something which is on your radar? They've been very, very consistent with their ROAs. 2.8 to 3% odd is what they've done over the last 5 quarters in terms of ROA. Does it currently, given or post this rally, does it look attractive to you?
See, to me, I generally don't talk stock specific, but especially for me, CV comes with the CV financials in tow. So obviously for me, if I'm bullish on CV, then every CV financier is because 99% of the vehicles in the CV segment are financed. And in this kind of a journey on the private capex, you'll see a good second-hand trade. So lenders who are focusing on financing second-hand commercial vehicles are obviously also have very good healthy margins. So broadly, like I said, along with CV, I'm positive with all the CV financiers also.
Sunil, what about the capital markets theme? I was just looking at BSE. It's hit a 5-month high. Volatile as it may be, this is, of course, a structural story, and who would know better than you? But where within the capital market theme do you still find opportunities and value on the table?
So for me, asset management companies, they've done well. But I see that's the way of the future, because I see a lot more new asset management companies coming into listing space. When a new listing comes in, it takes the whole sector up generally. And I think there are 2 or 3. There's IPRU, and then there's SBI, the asset management arm, which is likely to list. So I see asset management as a big, big play. That's number one. Second to me are wealth managers, the distribution and the wealth management companies, because I see the whole income tax cut, GST cut also playing its part on the savings field, and the penetration of mutual funds is largely driven by these distribution companies and the broking houses. So I would say that those are the 2 sweet spots. Insurance, I'll wait and see. I just heard the LIC chairman speak, but I'd like to know whether that input tax credit, how is it really going to play out? Because only a strong market expansion can cover for that input tax credit loss. So whether that's going to happen immediately or will take some time, I'll wait and watch on the insurance side. But apart from that, on this thing, I'm bullish. Like I said, asset management, broking and wealth management, and the capital market infrastructure companies.
The next mega event is 2.5 months away, and it's the budget. It's the union budget. How should one gear up for that? Because, in a month or so from now, conversation as well as stocks will start tilting towards those budget-related themes. So try to gear up for that.
So for me, I think the announcement of a big few PSU bank mergers should be the highlight of this budget, because financing for the country is big need, and PSU banks, I think, on the government's radar. Noises are coming on that. So I expect that the budget will be dominated by announcement of few big PSU bank mergers. That's number one. Number two is the balance between infra and giveaways. We do have some recent big elections coming up in the coming years, and so the government has to do a balancing act between sustaining the infra. So I don't see the infra getting expanded, but there would be a lot of directed, I would say, developmental populism as a focus of the budget, which is not a bad thing, though from a fiscal perspective, it doesn't look as great as saying I'll spend more money on capex. But the fact is the government has realized through multiple budgets that you have to put money in the hands of the people. So I think that some more rationalization on the tax front and putting money in people's hand, but in a way that will support development. That's the balancing act the finance minister will do, and I'm eagerly watching for that in terms of how do they actually transfer money onto the middle class and the spending population through the budget in a way. So I think those are the 2 key things for me to look out for. PSU mergers as well as the other part recently a colleague mentioned in terms of the InvITs coming through. So I think that getting the private sector to participate in the government capex through the PPP model will also be a big initiative the government will do, because they don't want to let the ball off on capex, but their hands are tied because of the GST cut, the revenues and all could take some time to pick back up. So I think they will also focus on the PPP model. And along with that, sorry to add one more point, I think that the PLI scheme has got to be modified in the context of the tariff and the other pressures that the sector are facing. Manufacturing, to boost private sector manufacturing in India, the PLI has only been partially successful in, let's say, the EMS space and all of that. But they have to widen it and get this whole Atmanirbhar, Make in India concept also a great big push. And so that's the 4th pillar on the budget that I expect the budget to give some clarity and direction on.
Right, indeed. Okay, let's address some other piece of news and an update coming in from the Supreme Court on the IHFL case. Now, the Apex Court has questioned the friendly approach of CBI and MCA in probing allegations against Indiabulls Housing Finance, or Sammaan Capital, as it's now known. My colleague Ankur Mishra is here with more details on the same.
Yes, Supreme Court has indeed questioned the approach of investigative agencies such as CBI and terming it as a friendly approach towards probing the matter related to IIHFL, which is now known as Sammaan Capital. The allegations were that the money was routed and rerouted through shell companies. There was a fraud which was committed by erstwhile promoters. Now, Supreme Court has urged today CBI to file an FIR, noting that it would strengthen the ED's position and has directed CBI to submit its response why actions were taken which were not at par what court would think so. But the company has come out with a response. In fact, these arguments were given in the case during the hearing, and they mentioned that it is a professionally run company. There are shareholders like LIC, BlackRock, among others, and there are 4.5 lakh public shareholders, and former promoter Sameer Gehlot has fully exited the company in 2022 and 23, and no case has sustained till now. And therefore, now what will happen? ED has assured Supreme Court that the joint meeting of investigative agencies such as ED, CBI, as well as market regulators SEBI and SFIO will be held in 2 weeks, and they have filed the complaints with the EOW of both Mumbai as well as Delhi. These were the submissions which were given by ED in the Supreme Court. But all in all, this matter will now be heard on 17th of December, and then we'll get to know what is the stance of the court.
Okay, and on the back of that, firstly, thank you so much, Ankur, for that. 13% lower on a Samman Capital. Kunal, do you have a view on charts with regard to this one? 13%, is this an opportunity again, if at all you see one?
See, I think after this kind of a news flow, we generally see, at least for the next couple of days, traders being a little bit more cautious because of, the kind of price action, the volumes which have shaped today for the stock on the back of this news. So maybe I think we'll wait out for another couple of days in case if there is no major follow-through price action on the downside. So today the stock, for example, is at 160 levels. Assuming if the stock settles, say closer to this 155 range, 150 mark on the downside, then we can attribute that maybe a near-term bottom could be at place. But as of now, maybe a wait and watch.
Okay. Kunal, a couple of other buzzers today. Gujarat Ambuja Expos. This one has been in that buzzing zone since the last couple of days. Give us your view on that one. Linde India is again doing very well, 6.5% higher. The volumes are strong here. Any of these which are on your radar?
So Linde India, yes, I think the stock was beaten down significantly. I think there was a point where Linde India had fallen very sharply below its 200 DMA. I think till yesterday the stock was almost at a distance of 1,000 to 1,500 points from its long-term moving averages. So after today's move, the stock seems to have narrowed that gap quite significantly. It's still trading below the 50 DMA. So that first level of resistance for Linde India is still at 6160, 6200 levels, thereabouts. So maybe another couple of percentage points move is where we can expect that the stock will come out into a strong bounce back and a trending mode on the upside. So as of now, 6,200 is the first litmus test of a resistance for Linde India.
The other large company which is in focus is Bharat Forge. It's up 5% from the day's lows. So it's done ever so well. You have a view there, Kunal?
Yeah, this is a very strong breakout. In fact, Bharat Forge, for example, I've tracked the stock over the last 1 month or so, where the stock has started to go into a very gradual, subtle uptrend from 1200, 1250 mark, which is the breakout of its 200 DMA. The stock has gradually moved towards the 1440, 50 levels, which it tested today. So I think it's been a fantastic move for Bharat Forge. And this puts the stock back towards the breakout of its previous major resistance, just about that 1400, 1450 range. I think the last time the stock was closer to that kind of a level was in start of 2025. The stock had made a high. So I think in that sense, it's a very strong breakout, and we are now looking at a major change of trend for Bharat Forge. So it's a very bullish chart, and from a medium-term perspective, I would look at, say, potentially 1550 to 1600 as a target range.
Okay, that's that on some of the buzzing stocks. But on that note, we'll let Sunil Subramaniam go. Thank you so much, Sunil, for taking the time out and speaking with us as always. But I'm going to hand it over to Snehi for the closing trades.
Oh, well, yes, overall, decent day of trade. In fact, good day of trade coming in for the market, because if you take a look at how the markets have panned out today, we're above the 26,000 mark for now, 26,050 thereabouts. So very decent recovery from the day's low, and 0.5% uptick, or about 130 points higher on the spot basis. Sensex 0.6% higher. Nifty Bank, which was subdued for most part of the day, has seen a very smart pickup. 0.5% uptick for Nifty Bank as well, and this has been a PSU Bank-led rally for the Nifty Bank today. Advanced decline ratio in the favor of the decline slightly. You had the small cap index that did pretty okay for itself. But the mid-cap, the small-cap index was 0.5% lower. The mid-cap index did pretty well for itself. If you take a look at some sectoral gainers and losers through and through the day of the IT counters, Nifty IT was up 3% with HCL Tech, Coforge, Infosys, Persistent, LTI, Mindtree, all of them up more than 3.5% in trade each. You'll also have the Infosys share buyback opening tomorrow, so watch out for that stock. Followed by that, Nifty PSU Banks was the second sectoral gainer. PNB, Bank of Baroda, PSB, Bank of India did well. On the flip side, Nifty Realty was an index that was the top sectoral loser, about 0.5% cut over there. Godrej Properties, DLF, Phoenix Mills, all of them were under pressure. On the winning side from the broader market, you had Jayaprakash Power on the back of that Adani news coming in, L&T Tech, Linde India, Latent View, Intellect Design, JK Cement did well. On the flip side, sharp cut on Sammaan Capital towards the end, day's end, a 13.5% downtick over there. KEC, Gujarat Mineral, Graphite India, Inox India, all of these stocks were under pressure. So this is how we're wrapping up for the day. Nifty has closed with an uptick of 0.5%, 26,050 thereabouts. But back to you guys in the studio for closing comments.
Oh yeah, absolutely. So far so good, and I just want to check in on what the global markets as well are looking like. Just very quickly before we take a call from Kunal, just looking at the pre-market rates right now ahead of earnings from Nvidia. You're actually seeing some rebound come in for the S&P futures, for the Nasdaq futures. We're scaling higher by 0.2% and about 40 odd points up in the green for the Dow futures. So quiet, but it seems like at least the selling could have stalled, at least going by the US futures right now. But Kunal, what does it look like for us? Because it's really turning very volatile. One up day, one down day. It's that kind of a market.
Yeah, and I think our markets are trying to adjust very, very quickly with what's happening across the globe. The handover for our markets when we are very close towards the breakout of the previous highs has not been all rosy. But I think we'll still take it with both hands. The fact that the Nifty in the market internals have been very, very strong. Sector-wise, also I think we've done phenomenally well. The Nifty scaling past about this 26,000 mark for the 5th or the 6th time in the last 1 to 1.5 odd month, and with every new retest towards the 26k mark, we have a renewed sector composition which the markets have shown. Mid cap 50 index showing signs of strength, so that indicates that the market breadth is also showing signs of improvement. So market internal wise, I think it's a classical market. We should be looking for a breakout of the previous major highs pretty quickly, but it's just that the global markets are putting the momentum under check for us.
Okay, Kunal, with that, we'll let you go on that note as well. And, viewers, that's all that we have today on Closing Trades from Aisha, myself, and everyone who puts this show together. Thanks so much for watching. Stay tuned. Live coverage continues here on ET Now.